Hello, everyone. Yes, we are live here on our webinar platform and also on our YouTube channel. So, welcome to the webinar. My name is Olena Gryniuk. I'm the CE Director at the SME Banking Club, and I will host today's webinar. And today we will discuss the topic of the digitalization of the risk management with the help of low-code platforms. And my guests today are Christian Ruehmer, CEO and co-founder of Q-Lana, and Bharath Kumar, CTO and co-founder at Q-Lana, a tech company which helps to digitalize SME lending process. So Christian and Bharath, glad to have you. Welcome.
Thank you.
Okay, yeah, and before we go to the webinar, very shortly organization information from my side. So we will start from the presentations, and after the presentations, we will have a Q&A session. So please prepare your questions to all the speakers. Even during the presentations, you can type them in the chat, and during the Q&A session, we will read them all and answer your questions. And we plan that our webinar will last for 40-45 minutes. So since we're recording this webinar, so right after we finish, you will receive the link to the video and the presentation as well. So let's go to our topic. We are covering mainly the CE region with our digital studies. I would like to share a very shortly what is the situation with the digitalization of SME lending here in the Central Europe. And so these are the results of our annual study. And we analyze only functionalities, so functionality of whether the SME customers can apply for loan in a digital way, both online and mobile, and whether all the process is digitalized. So we analyze 20 parameters with that, and this year 80 banks and financial companies were covered with the study for the Central Europe, and from them 33 financial institutions offer at least online or mobile application for SME loan. So this gives us the situation when 41% of all the SME lenders offer online or mobile application for SME loan. And mainly all of them offer these for private entrepreneurs or sole entrepreneurs, and 86% also offer it for the legal entities, for companies. And 21 banks and financial organizations have fully digital SME lending process, which give us 26% of all the SME lenders. And whether it is a big number or not, let's discuss further. As of me, I do consider that today at least application for a loan should be online or mobile at 100% of SME lenders if they really target SME sector. And if we look the geographical distribution, what are the main countries with such solutions? We do see here that Poland is the leader here, having 12 bank and fintechs offering partial digital process for SMEs, meaning at least an application, and 10 fully digitalized processes. Romania, 7 companies, Czech Republic, 5, Turkey, 3, Croatia, 2 banks, and such countries as Slovakia, Bulgaria, Slovenia, and Serbia, one bank per country. So this is the snapshot and overview of what we have in the CE region. I do see and know that we have attendees today not only from the Central Europe. If you have such data or you can share such data within the comments, what's the situation in your countries, you're welcome to do so. And just wanted to say that the digitalization and automation is really the only way to cover SMEs, especially micro segments, with access to SME finance. Yeah, because it's both for SMEs. They require very fast decisions. They cannot wait a month, while a bank with traditional process will give them a decision. But also for the financial institutions, as then this is cost effective for small tickets. Yeah, to make decisions fast and less costly. So that's why we don't discuss why we should digitalize. We rather discuss how to digitalize it in effective way. And today we will discuss how to do it with the help or by leveraging low-code platform. And on this word, I passing word Christian and Bharath to you. Please share what you offer and how you can help banks to digitalize their SME lending process.
Perfect. Thank you very much, Olena. Thank you for the introduction. And yeah, we've been working together for a couple of years now, and I'm really curious always about seeing the development in Eastern Europe, because it is kind of on the forefront of other regions as well. And even if you say here that the digital transformation or the digitalization in the business is not yet at the level where you like it to be, it is probably far advanced the regions that we are operating in, and we always see at least the thought process or the mindset around digital transformation in Eastern Europe is still quite advanced, and we'd like to be part of that, and we'd like to add our value here by basically bringing in our philosophy as Q-Lana and as our platform that we have, because we think that there is a lot of value added here also when you look deeper into a financial institution, because basically the lending or the business with SMEs, from my perspective or from our perspective here, is still the most interesting part of lending, helping an SME to grow, not just with a single transaction, but with a long-term relationship, is probably the most exciting part that you as a banker can have in your career, because really you see how your generally very abstract business ideas or business model becomes reality by helping small enterprises to grow. And that's where we started with Q-Lana, and that's where basically our idea is really to be able to collect knowledge, collect information with in the interaction with customers. Also, because a lot of information is proprietary and is created in the collaboration between you as a banker and your customer, and making sure that this information is collected, making sure that the information is also used, assessed, and then again applied for in the next steps in your client relationships. That's what we'd like to help you with Q-Lana. So at the core, to just give you a brief introduction, at the core, Q-Lana is also a loan management system. A loan management system, like many loan management systems that cover the entire end-to-end process of an acquisition of a client, of a loan application, an assessment and approval, a processing, monitoring, collection, special servicing. So we cover all these parts. And the beauty here is that, as we have seen, no bank is the same, even though the lending process is quite similar. Whether you talk about a consumer loan, an SME loan, a corporate loan, all go through those steps, even if some steps are automated, but those steps are similar. Yet our low-code platform that we have in the background, and my colleague Bharath, co-founder of Q-Lana, who has been working with me now since a couple of years on developing these ideas and translating these ideas into reality, can show you that, or can demonstrate to you that we are extremely flexible on adjusting these workflows to your specific needs. Yeah, both in replicating what you currently have, but also in helping you implementing new parts, modifications, adjustments as you process or progress. I'm kind of proud that we have achieved it, but I'm also not proud about the customer that it is so complicated. But our most complex customer has over 500 steps in his lending process, and we digitalized each and every one of them. And now we're in the process, potentially also helping him to get more efficient here. But we're not just a loan management system in the traditional sense. So we're not just a conveyor belt where you process loans. We have actually thought about a couple of ideas at each and every step of the process where we'd like to make the loan process, the loan management system smarter. Yeah. And this goes in the acquisition where we talk about the contact management, the tracking of the client's activities, the KYC check. It goes to the loan application form where we can have various forms where we can do various ratings, both for credit, ESG, as well as even an impact measuring if necessary, where we can have document management, the various workflows, and so on. To the assessment, the approval, where we can talk about committees or automated approvals, where we can track the approval conditions, all the way to disbursement. And while you see here that only the first three process steps are really around the client acquisition and the approval, the rest goes around processing and monitoring, because we believe that this is a very much underestimated or undervalued process in the SME lending, so that really the monitoring is where you really make sure that your client repays and that you learn from your client interaction and build your experience with the client. So we make sure that you have an early warning system, you have your checklists, you have your evaluation support, you have your collection support, and so on. So those are the parts which when we have built Q-Lana, are quite emphasized, so that really it goes beyond just the loan management per se. And here, as you can see now in the screen, we also have basically built the entire platform on our low-code environment. The low-code that is proprietary, Bharath and his team have developed that, is extremely flexible. It's not a no-code platform where you can basically do everything yourself. We will work with you, or we will train you on doing this, but it still allows us to be extremely flexible. And obviously, we have also developed ideas around the use of artificial intelligence, and Bharath will talk about these ideas here in a moment, how we can even leverage further the information collection, the data collection that we have developed with the artificial intelligence and the low-code platform together. But before that, let me just briefly explain, because we said we'd like to talk about risk management in this webinar. So let me show you how we integrate basically the entire risk management into the loan management system, because we believe indeed that the risk management is an essential part of your business activities. As a banker, you are in the business of taking risk. Yeah? You're in the business, that's why you earn money, because you are making risk decisions. Now, that's not gambling. Yeah? Gambling is something that has a negative expected value. You're not a gambler. You are a risk manager. So your goal is to eliminate all avoidable mistakes, make good assessment decisions, and then develop the client relationship. So we have done that by enhancing the concepts that we have done with the loan management, with ideas that come around our analysis tools, as well as our advisory business, as well as our strive into artificial intelligence. I've listed them here, and I would like to take you a few moments to go deeper into these instruments to see how the combination of the knowledge that you collect, the experience around risk management, can really help you building a better client relationship. Yeah? And this starts, as we said here, with the visualization of exposure. So you don't want to just build a loan management conveyor belt where you just process your loan through. You'd like to see what is the actual exposure that you have with the client, with the sector, with the region, with a specific product, so that you can map your exposure to your appetite, that you can see where your exposure is at the limit of your appetite, but you can also see where you have free space, where you have more appetite than currently exposure, to really steer your business and also to continuously update your activities. Because it's also clear that your risk management doesn't stop at the approval. Yeah? It basically starts at the approval. Traditionally, we think about, oh, there's an approval process, we need to involve risk management, and we decide, and then we give out the loan, and then we wait until the client doesn't pay anymore. That is not the right approach from our perspective. You should really make sure that you have an ongoing risk management process. You analyze the client on an ongoing basis. Also, because clients don't default before disbursement, so they default after the disbursement, you need to make sure that your risk management covers that. And ultimately, you'd like to go into an environment where you have a continuous risk analysis, a continuous assessment of the client's exposure, so that you always know how much more risk you can take with the client, or how you steer the risk, and how you basically disassociate the approval process from the risk management process, so that you can even approve faster as long as the client is within your appetite. So visualizing the exposure is an essential component. Obviously, as a bank, it's not just about risk taking, it's also about earning revenues. So also you need to make sure you have the with the entire customer relationship. You'd like to understand from an SME how much money are you earning on the loans that you do with the SME, but you also like to see how much money are you making on all the employee accounts that you have offered to the customer, or how much is this as an entrepreneur generating in revenues for you from the family members. So you need to have your loan management system feeding all the information together with the other systems that you have in place, like core banking. And here, through the advisory that we're offering, we'd like to make sure that you can really have full transparency about your revenues. If you have that together, your exposures and your revenues, then you only need one more item to make everything work, which is basically the risk scoring. And here as well, we have implemented in Q-Lana a scoring function, a rating function that we can configure to your purposes. And whether you talk now about a consumer rating, or an SME rating, or a corporate rating, or you talk about a rating that is done before approval, or a rating during monitoring. You talk about a rating that can have heuristic components, like an assessment of a market position or management quality, or statistical components, like, for example, relative to financial ratios, or can have knock-in or knock-out criteria based on external data you get from a credit bureau. It doesn't matter. We can compose the right way for you so that you have an ongoing assessment, and we help you to calibrate this rating towards probability of default table, because then if you have all these things together, you get into the idea of having really a perfect system where you can calculate a risk-adjusted return on capital and can steer with this your entire lending process through the exposure that you aggregate here in Q-Lana, and through your combination with your appetite. Yeah? That's basically where we go in and make sure that we have the entire knowledge management set, where we have a couple of tools as well inside Q-Lana to make sure information is collected in a smart way, so that, for example, you're not overwriting information, that you're collecting data in the right way, that you are setting up your database, your data structure. One of the things we discussed actually a couple of weeks ago in the event in Vienna, actually, which was a great event. Thanks, Olena, again for organizing that. As we work with you on implementing a loan management system, the platform, Q-Lana, we also realize, similar to our competitors, that we are the ones who know most about the data structure of a customer. Yeah, we know better how the data of a customer is used, and so we can actually advise you on how to build out your data, your database and your data warehouse, to make sure that you collect the right information and that you use the right information. Yeah? Another component where we look in is, of course, also the qualitative information. In every interaction with the client, you gain experience. You see how the client reacts. You see the psychological state of the client. Is he nervous? Is he getting comfortable? Is he making progress? Is he happy with his business? Are there other factors that are influencing him? So through the right loan management system like Q-Lana, we make sure that you collect all this information to basically, in the end, really have the right system in place that allows you to really collect the right data, to really analyze the right data, and set up yourself for really good SME lending process. Yeah, all these things come together here in Q-Lana, then ultimately for, let me just jump to this quickly, ultimately for the ability to manage your risks better And when we talk about risk assessment and risk management, we talk about the way how to define your risk appetite, how to do your sector assessments, your ratings, your sector limits. All these parts come together to really develop your customer structure, your business structure here, and your risk framework. And this is not just done by an automation in the loan management system. It includes advisory, it includes our intelligence, it does include AI, as Bharath will explain to you. But we basically help you getting this system in place so that you have a continuous assessment of your risk appetite, and by that also make sure that you have an ongoing ability to understand what is the client's current exposure and what additional exposure you can take. Because ideally, again, you'd like to have a situation in which you know whether you'd like to approve a customer even before he asks for the loan. Yeah? If you have to just sharpen your pencils once the client wakes up and says, I need a loan, then efficiency can do a lot of things, but it's not good enough. Now, with those parts in place, you have the transaction approval. And the second part, which we're looking in risk management, is the entire monitoring part, where really we look at an early warning system that combines visits, covenant monitoring, data analytics, market observations, and allows you through the active management of a watch list to really have a full grip around the client exposure, because actually you really like to make sure you manage your risks well and you don't just start managing problem loans. The difference here is very simple, that the most risky client in a business is not the client that has not paid for 90 days. Yeah? That's usually a problem loan, a problem exposure. The risky client is the one that pays today but doesn't pay tomorrow. And through the system that we have set up here, through the monitoring, through the visits, through the watch list, and all these parts, we will help you to make sure that you discover the problems earlier. Yeah? And if you build this out well, and I'm just giving this as a first idea, then I hand over to Bharath to give you some ideas about how to translate this with technology. The next part, of course, is really the entire customer relationship. How do you make sure that you perfectly manage a customer relationship, that you develop ideas, that you develop products? Well, the first part is really that you collect your data well and that you analyze your data well. That's basically what we offer with Q-Lana. That's what we've done with a couple of our clients already. That's, of course, not something that we start upfront from 0 to 100 in one deployment, but it's basically a partnership which we have, which we offer to our customers to start with one step and then develop over time. Now, that's, of course, again, that's technology and concepts, but let's move forward. Let's have a look at what else is possible by really managing risks smarter and involving not just our local platform, which we're very proud of, but also go further into artificial intelligence. With this, maybe Bharath, it's good time to yeah, pull out your ideas, and then I will also answer the questions. I've seen one question already, but I will comment on Mambu as well. Thank you.
Uh, thanks, Christian.
We can't hear you, Bharath, I think.
Can you hear me now?
Bharath, I don't think we can hear you.
Yes, we can. It's a little bit of echo, but we do hear.
No, not yet.
I
Oh, it's me.
I just passed on for a minute, so now you can
Yeah.
hear me better.
Yes, we do.
Okay, great. Okay, so let me begin with this phrase. So digitization is only a part of the problem. The much bigger problem to solve is digital adoption. That's where Q-Lana plays a very interesting role so far, as Christian left with a strong note saying that Q-Lana is not about buying another tool and then trying to implement. Rather, it is building partnership, taking small steps towards that end goal. Where we handhold everybody to go through the whole process, ensure that they use the system. And with that same culture inside the organization, we've been looking at how we can improve the efficiency of the loan officer. For Q-Lana, the entire universe is around loan officer. How do we help him better so that the bank can perform much better? When we assessed what kind of tools do they use, how many tools do they use, on an average, depending upon the organization, there's anywhere between 8 to 20 different tools that these loan officers are using, and which means that you're using 8 to 20 different databases, and you have to redo the same work again and again. What we are coming up with is, which is something very powerful to the loan officers. Just to avoid all these hassles, we've started building something called as Q-Lana workspaces, which would help you at multiple levels in terms of integrating all your tools, in terms of automating workflows, and most importantly, in terms of delivering an actionable insights, so that with one interface you can start looking at everything. Okay. Um, Before I get into the details, let me also provide you what the future is going to look like. So far, we have seen web, we have also seen mobile. The future is going to be conversational interfaces. So, what do we mean by that? You will, in order to increase adoption as part of Q-Lana and as part of this whole AI revolution that's happening today, companies like us are looking at how do we enable the simple conversations into much more meaningful and much more powerful ways of interacting with the system. In probably in next 12 months down the lane, you would be using Q-Lana from Alexa instead of your mobile phone. You might talk to Q-Lana instead of dragging and dropping or clicking on something. Okay. Being said that, for today's context, as I said, Q-Lana is building workspaces, which are private environments for each loan officer who would be able to perform a few things. Probably today, I'll go through a few of those details. Um, One, it'll help you close more sales. It'll help you do your lead management much better. It tries to understand what's been entered inside Q-Lana. From that, it'll tell you what kind of communication you need to send, when you need to send, and how you need to send it as well. Okay. It'll also help you assess, out of those 20 leads that you are looking at, what are those five opportunities that you should be concentrating on. So some of these might be available with HubSpots, might be available with Salesforce, but as a loan management platform, this has a much better accuracy of collecting data, and it understands, Q-Lana understands how the previous loans were processed. So it will be able to tell you, instead of just on who has clicked on the email, who has clicked on the website, rather than that, it will give you a much more knowledgeable decision in terms of who is most probably can get this loan, and how you can design a much better proposal as such. Okay. Uh, at each and every stage, as I said, Q-Lana offers a series of tools, which you can build through conversations, which you can customize through conversations. Something like a proposal building, something like a deal tracking tools. So the first part, as I said, it is on the sales enablement part. So as a bank, you can create a lot of enablement templates, enablement bingo cards to your sales team, so that they exactly and accurately speak to the clients based on what is required. Once you're done with your lead closure, then Q-Lana helps you write better proposals, understand risk better, especially from a sector specific risk, region specific risk, and the overall risk that the company, the bank is trying to look at as such. Uh,
Sorry
Once
to
the loan
interrupt.
is closed,
I'm sorry to interrupt. Just we don't see the exact slides. If you're referring some slides, so Christian, either we
I
should.
know I'm just talking.
Okay,
I'm sorry, I'm just talking.
or just choose the slide. Good.
Okay. So, once, as Christian mentioned, risk management is not about finding something on the 11th hour, but rather managing everything so that you're kind of little prepared. So, in terms of ensuring that there is a customer success, you get a better customer success. Q-Lana collects different kinds of information about customers, uh, provides you a better overall picture, and it will give you very personalized engagement information and products that you can offer to your clients as well. Depending upon the feedback that you have collected, this can be very qualitative feedback instead of a quantitative feedback. So last but not the least, not just in terms of helping you to be productive, but it can the Q-Lana AI workspace can really help even your customers perform much better because of the low code's ability. You can build applications for your own clients as well as and when required. It can be those inventory management, it can be those small dashboards which run on top of their existing accounting systems. Okay, it can be educational content on how they need to grow their business. It can be those SWOT analysis tools, the business model canvas tools, on giving them not just a financial help, but rather you can lend a helping hand even in their marketing and sales activities, their operation, some of their operational activities, helping them understand uh, the risk potential, the risk and the reward potential that they have. Okay. All of these can be achieved using Q-Lana along with AI and the low code tools as such. Okay. So to summarize quickly, a loan officer using Q-Lana workspace would be able to enhance its sales, would be able to improve the proposal quality so that you get better approvals instead of rejections and redos. It reduces a lot of back and forth activities. It reduces time, and it will also help you to do a proactive customer support instead of reactive customer support. And most importantly, this is where I as an individual or a bank customer always face. So bank only gives loan when they think that it is right, or when they think that they need to fulfill their quota. It is not when I need it. Uh, so if as a bank, if you can take couple more steps in terms of enabling the end customer to empower their own business, it is nothing like that, and that's great. And if you intend to do that, Q-Lana workspace is the right space for you to look at and explore. So I'll stop here. Probably we can take up quick questions. Thank you.
So just thank you, Bharat. So just to summarize, there are maybe these four areas that we see where um, risk management and customer service can be enhanced with Q-Lana Workspace, and AI. The first one is the very simple one, straightforward. We can help you doing better customer analysis. We can help you coming up with ideas about what customers can really need based on patterns that other customers have developed, based on customer journeys. That is the entire customer centricity that you're talking about, where we can develop these parts together. Now, of course, this is not automated. This is basically we develop this together with you so that these customer journeys can become clear. The second one is really helping you writing better proposals, loan management proposals, because we can summarize all the information that you have collected. Now, that of course requires that we start early on, and when we build information, that we structure the data well, qualitative and quantitative data, the documents, that the right document management makes these information available so you can summarize this information for the risk assessment. And think about this, you join the bank new, you're given a portfolio of 20 customers, you know nothing about them, and then the summary of this information will really help you doing better business. The third area is really this area of the customer success, where the idea is to really develop together with you questionnaires. Yeah, client shows up in the branch, or you have a client visit, you have a call with a client. Here are 10 questions that you need to ask the customer. That's really a value added here. And then finally, and I think this is the most exciting part, we can have a full webinar about this actually on that, is the app development. And Bharat and I, we sat down and had developed customer apps within a day. Yeah. So if you think about your customer needs inventory management, your customer needs a reservation system, your customer needs an own workflow. These are the things that you as a bank can make available to the customer, as long as the customer is, for example, sharing the results of this work with you. So you become a real business partner for the customer. And if, for example, again, if you have, let's say, 50 clients in the agriculture space, you can develop a small agriculture app that allows tracking the harvest, or allows tracking the products and so on, so that you have a better overview. If you are working with traders, you develop an inventory system. If you have hotels and restaurants, you develop a small reservation system for them that you make available to the customers, and the effort for that is quite small. So those are the areas where we think that AI will help. We have to acknowledge we haven't perfectly invented this with a individual client. We're very open to work with any of the clients here to really make this reality, because it is not something that you order online and then tomorrow we ship this on your premises and then you have it. It is really something that requires a co-development, because it is basically influencing every step of your bank. So with that, let's see. We have some time, I think, for questions.
Yes.
I've seen some. I tried to answer the last one that I just got here, or just with this comment. I hope that Rogerio, this was sufficient. If not, please ask more. Otherwise, yeah.
Yes.
That's basically.
We have another question from Liliana. Is it
Yeah.
possible for a scoring or rating model to be bought separately of other modules? In your case.
Yes. Yes. So basically, you have to start somewhere. And for the rating and scoring, we have, so basically, first of all, almost every module that we have, we can develop for you separately and offer to you separately. It's a starting point. Yeah? There are two components to rating and scoring. One is the technology, and the other one is the data. Yeah? So with technology, we can come to you, we can develop anything that you want immediately, and we can use our technology to basically handle that. So you can track your customers, you can build your rating, and here as well, we make sure that every time you update the rating, you're not losing the older information, but you're basically keeping the information, and that's being built. The second part, which I think is in the long run more interesting, is to really help you making sure that you collect the data well. Yeah, that you don't overwrite data. That, for example, if I have a 20-year experience with you as a customer, you know that for the first 5 years I've been single, then I've been married, then I had a child, then I had a real estate, then I finished my school, and so on and so forth, that this information is kept. That requires a smart data management. That's the second part that we can build with you. And then on top of that, we can build anything else that makes sure. But yes, of course, we can start with a rating and scoring module separately, using all kinds of data, integrate any kind of external data, and then also make sure that your rating and scoring is not just used for the approval decision, but also for the monitoring.
Okay. Yeah, we had a question about Mambu, which you commented here in the chat. But please let's say it in voice. So what's maybe not only compared to
other,
yeah.
So banking is not that complicated, per se. Banking's been around for a couple of 100 years, and there is very little innovation. So there are a couple of companies who are really doing smart things, and we've been working with a couple of people that we like a lot. And I've been in contact with Frederick and Eugene from Mambu when they created Mambu. And we talked about where Q-Lana makes sense and where Mambu made sense. In the beginning, they've been very focused on core banking and on accounting and making sure that they can set up the accounting of a bank. And we thought more about the real long-term data collection, as in making sure that really data is stored, is also the qualitative information is really becoming available. Yeah? This is really where we see our value added. Of course, we can collaborate, and of course, we are not a core banking. Yeah, we can combine, and as similar to the question that came in from Liliana as well, we can do modules as well, and we can combine with any module that exists. Same way, like for example, in digital transformation, if we start with digital transformation, we have to look at what's available. Yeah, we have to basically, we don't want to throw out everything that you have in your institution and just replace it. We'd like to make sure we do it in the right way so that whatever you have invested in becomes valuable as well, maybe even more than before. And we make sure that we combine the information so that something useful comes out.
So from what to start, actually, Christian? So yeah, as you mentioned, when the banks started some digital transformation, they have already core system, maybe a new one. They have some loan management systems. Yeah. So from what to start, how the integration in that case would be like?
So probably I'll take that question.
Okay, sure.
Uh,
Bharath.
so this is a very generic problem for any transformation project. Okay, where to start? The first question is wherever there's not much of a big disruption that technology can create, so that they're okay with it. Okay. Identify those one, two, three areas which is not going to create a big disruption in their working style, uh, and it can slowly get into them is probably the one area that I would look at. The second one is where you really don't need to invest a huge amount of money or resources to get something done. Okay, that would be my second area as such. Because if you have to buy a huge system, technology is not going to solve all the problems. So if you think that technology would solve problem, sorry, technology itself is a problem. So ensure you find a simple enough system to get used to it. It's not it. Thirdly, don't look at a system which can cater to each and every need that you have. Take a case and see if that can fit in, and then move forward with the next steps. Okay. I understand in a long run you need to have all your data integrated. You need to ensure that this the data and workflow works seamlessly well. But for starters, I don't recommend you to think a lot, but rather get onto it and start doing is what I would prefer. That'll at least give you a feasibility. Otherwise, you'll be thinking forever.
Mm-hmm.
And you should complement that. You should start about something that is, you start and you think about something that has an impact. So it should be a loan product, maybe, or a lending product that is not just a niche product, or it should not just be a small process in your head office. So not just the management of the vacation of your employees, but something that is really has some visibility. Huh? But it also needs to be then it needs to come together with a bigger plan. Now it's not that you execute that plan step by step without corrections, but it also can't be just a reaction about, oh, my neighbors have an online platform. Now I need that online platform too. Yeah. Or my neighbors just started invoice discounting or factoring. Now I have to do this too. There needs to be some desire and some motivation to really pull this through. But you need to start somewhere, and this somewhere can be, as the question was here, just with an update of the rating and scoring system so that you realize how things work together. Yeah? Because sometimes we overcomplicate things because we think banking is so complicated. That's usually the case because we as bankers, we know that banking is simple. Therefore, we make it complicated by language. Yeah? But at least with ourselves, we should acknowledge that banking is much simpler. I give you money, you promise to pay me back. That's it. Yeah?
And so, yeah, Bharat, you would like to add something, or?
Yeah, yeah, yeah. Probably just from a Q-Lana standpoint, what we have done, the reason why we picked a low-code platform is that for simple reason that your ask of or your requirement will keep changing and keep growing bigger and bigger. You can't put yourself into a system which is going to stay the same for the next 5 to 10 years. So with low code, with the power of low code, now with the power of AI, you can start small, and the same system can be enhanced into bigger and bigger because all the security, scalability, customization capabilities, all of that are designed for the big, but you start small. So that's the beauty of one of the USPs of Q-Lana is what I would consider.
Okay, okay. And one last question to wrap up today's webinar will be to you, and on the area from what I started actually the webinar with the statistics from the CEE region. And so we have less than 50% of the SME lenders with at least partial digital journeys in this process. And we do see even so both with the banks who digitalized the SME lending process, or it still remains a traditional one, we do see that the criteria for that to receive a loan or to get a loan are much more restricted than we see in the fintechs, with the fintechs. So my question to you is, do you think or do we think in the way that if we automate the risk assessment process, we will use real-time data, update the scoring with this data, can we say that this is an opportunity that the banks will be less restrictive in their credit policies for SMEs? Can we say that that they, because they will know the customer better and understand the customer better based on real-time data which are processed in seconds and not manually within days, can we say that this will help to provide less restrictive loans or less restrictive criteria to get loan for SMEs? What's your opinion on that?
Well, we definitely hope that it gets easier. Yeah. So of course we cannot force the bank to be easier in their process. But let me tell you, one of my key experiences as a bank, and I had lots of very bad experiences with banks myself as a customer. I've also been a banker, and I've seen that we've been overly restrictive on things where this was more driven by fear and by the lack of understanding. But when there was a situation in which I had sourced a loan for Q-Lana, and the company is registered in the US with operations in several countries. The company had its big client in Africa, and the bank was located south of Munich. Yeah? And this was a bank I'm dealing with for the past 35 years. They had a good relationship with me. They have a good relationship with my family and so on. And they had loan officers who had all the access there. Yeah? And this was exactly how we were able to pull off a significant working capital loan within 10 days. Because of that relationship, because of that knowledge. So the banks need to work towards that knowledge. Now, fintechs, of course, have it in parts easier because they sometimes pick just a niche product, a small product that's often the least risky one. They would have a significant problem if they go into CapEx loans as well. And the fintechs often were just trying to be more aggressive to really grab some market share. The truth is somewhere in between. It needs to be the basis of information collection, as well as then the will of the bank to really get deeper into that part because of the experience. Now, process-wise, of course, and I think I mentioned this a little bit in the webinar, process-wise, I always recommend that you really move away from a transaction-based approval towards a risk appetite of a client. Yeah? You like to know if Q-Lana comes in tomorrow, they have an exposure of X, you have an appetite for Y. So if they need the difference between X and Y, it can go faster. Yeah? It can go more efficient because you continuously analyze. But that, of course, requires that you really monitor, that you have your discipline, your process in place to monitor, not just ad hoc start sharpening the pencil when the client knocks on the door and says he needs a loan. That is the process to go to. The fintechs have, of course, a benefit on their niche product. But when it really comes to the larger loans, to the CapEx loans, to the acquisition of another company, to an expansion, to growth, then the relationship is still important. But in the end, it's the desire to work in that direction. And again, I think it's the most exciting part as well. once you are a banker with an experience in a specific sector, with a bank with an experience in a specific sector, you can really steer that, and this becomes really much more exciting than just filling out a scoring form. Huh?
Mm-hmm. Mm-hmm. All right, we do have one late question, which will be the last. I will read it. That's yes. Do you have analytics to define the key statistics by industries based on the historical SME data or information, so we can compare the client with these statistics?
So we have started to collect information. Thank you, Sana, for that question. We have started to collect information about the various sectors and about the various criteria that are relevant for sectors. We have done it for the agriculture space. We have done it for the trade space. That's some work we have done. It is something that we can work together and really build this based on the information that you have collected there, and use this as an input factor. I have to warn though, I would never buy a scoring model from another bank or from another provider. Huh? I've seen people offering Altman C-score from 1967 as an innovative rating tool. That's not what you want to have. Yeah, you want to have the logic of that, yes, with the data that you can adjust yourself and with getting comfortable. So you can buy technology, but as Bharath said, the technology comes with its own parts. The experience is the one that you need to harvest yourself. But we can certainly help. And one of the things next to the technology, coming back to the question that was asked before, of course, we also work with you on an advisory basis and help you showing us your skills, our skills, and then basically build this out with you. Yeah.
Thank you very much. Yes, we answered all the questions. Thank you very much, Kristen and Bharath, for your contribution,
Thank you.
for very detailed presentations. Yeah, thank you very much, all the attendees, to staying till the very end. And yeah, thank you very much. We'll send all the materials today. Yeah,
Thank
see
you
you
very
next
much.
time and see you next year already with
Thank you.
the
Looking forward to be back with you next year. Yes, and for all of you, no matter what you celebrate, have a good end of the year. Happy holidays, and all the best for the year 2025.
yeah, happy holidays. All the best. See you
Happy
next year.
Thank
holidays.
you. Thank you.
Bye.
Bye bye.